Welcome to Spiedel's California Minute. I'm your host, Catherine Sedan. This week, we're covering the FTB's annual outreach campaign to certain taxpayers who file Schedule A and Schedule C. Spiedel's California Tax Letter is a monthly newsletter that will ensure both you and your clients are up to date with California tax law changes. You can get subscription details and download a sample issue at caltax.com under Publications. In 2022, the FTB started an outreach campaign sending letters titled Review Your State Tax Return to taxpayers who reported large Schedule A deductions or large Schedule C expenses. The FTB is continuing this campaign and started sending these letters in May. The purpose of the review letter is to encourage taxpayers to review their 2021 tax return and current year tax return for any discrepancies. The letters explain the type of deductions or expenses commonly overstated, where to find more information regarding what is reportable, and recommend filing an amended tax return if necessary. If no changes are needed to the items reported, then no action or response is necessary. Unfortunately, these letters could generate a lot of calls from your clients, but if they legitimately claimed the expenses, they can ignore these letters. Taxpayers should not make a change and file an amended return just because they were prompted to by the FTB. A review letter does not constitute an audit. Instead, it's part of an educational campaign. But the 2021 return does remain subject to audit until the statute of limitations expires. According to the FTB, a taxpayer who receives an education letter is not more or less likely to be selected for audit. Their chances of being selected for audit remain the same as before they were sent the letter, and the FTB will continue to use their normal audit selection process. Taxpayers should review their return and make sure that the amounts claimed are accurate and that they have the proper documentation to substantiate their deductions or expenses. Common Schedule A problem areas include medical expenses, like deducting insurance premiums paid with pre-tax dollars, charitable contributions, like donations made to charities that are not qualified, or non-cash donation deductions in excess of the fair market value of the item donated, and job expense and miscellaneous deductions, like deductions for uniforms that are not required by the employer. Common Schedule C audit areas include business meals and travel, and car and truck expenses like mileage. When these issues are appealed, the taxpayer will lose if they have little to no substantiation to back up large deductions. Proper substantiation includes contemporaneous records like mileage logs and repair receipts showing total miles driven. And for meals and travel, be sure to record dates, destination, and the business purpose or the business benefit the taxpayer expects to derive. Also, Schedule C deduction amounts that aren't normal for the size of the business could be an audit trigger. For example, a real estate agent taking a course that costs $30,000 that promises to teach them how to make $1 million. This large of an education expense for a small real estate professional could be questioned. Spiedel's federal and California tax update will get you updated on everything you need to know for the upcoming tax season, and there are live webinar and in-person seminar options available. Go to caltax.com for details. That's all for this week. Join us next time for another episode of Spiedel's California Minute.